Let me make sure that I have this correctly. Yeah, I do. Yeah. Okay. So here your net sales is not even at uh, all the way going up or all the way going down. Okay, that part is done. Next, we're going to have to calculate operating cash flow. But to do that, I need to know net income. Okay. I need to know depreciation. And to calculate net income, I also need to calculate variable costs as well as fixed costs. Since they pretty much work off of the sales, let's calculate uh, and let's enter these as inputs. Variable cost percentage new. Let's remember what those are. For the new, my gross margin is 35. That means variable cost percentage is 35. No, gross margin is 65. So for every $100 of sales I make of the new product, it costs me 35 to put it in place. And for the old, gross margin is 45. Hence, variable cost percentage is 55. Variable cost percentage is 1 minus the gross margin. So all I have to do is take the new sales times variable cost percentage of the new plus change in existing sales. The reason I'm using change, remember the incremental cash flow principle. Normally, I would have done it off of the net sales, but the cost percentages are different, so I have to pretty much put them together. So the first year, I have additional $16.95 million variable cost. And I have all of these. And I don't want no stinking cents. Now all I have to do is get depreciation. Well, I have two sources of depreciation. One, the factory, the other is the machinery. But luckily, we already have calculated them while calculating the salvage values. All we have to do is grab them. Factory salvage, the depreciation amount, plus machine salvage depreciation amount. So those are my annual depreciation amounts. How come they are the same? Huh? Ah, yeah, because of that. Let me put in one more input for ourselves. Annual fixed cost. All right. So I can calculate net income, which is net sales minus variable cost minus annual fixed cost. I'm gonna fix that one minus depreciation. That's income before taxes. So let's put in our parameters. 25. So multiply that by 1 minus the tax rate. So for each year, we now also know the net income. But that's not the cash flow concept we want, because that's an accounting number. Cash flow concept we want is operating cash flow, which means take the net income, add the depreciation back. And I'm going to do it directly on the CFFA page. I could have done it here, but year zero, there is no operating cash flow. Net income plus depreciation. Dollar, boom, boom. I'm going to actually make this black and white. Now all I have to do is calculate cash flow from assets. That's easy. Operating cash flow minus net capital spending minus change in net working capital. Let's make that. I'm gonna use the bright reds for that. Those are my cash flows from the project. See how we built them step by step? Given this, I can make my calculations on the investment criteria. Obviously, you could go ahead and use the template, or if at this point all I need from this is MPV and IRR, I don't need no stinking template for that. Let me capital. 12, did we say? 12, yeah. Let's call this significance, since we're gonna be fancy about it. Let's put that at 10%. But first, let's calculate NPV. There's a function in Excel that's called NPV, but unfortunately, it calculates only present value of the future cash flows. but it's not something we cannot fix easily. The first argument is the discount rate. The second argument is the range of future cash flows. And let's make that black and white. But this is only value of the future cash flows. So I need to add, or did I need to add the year zero cash flow, or negative of that is the cost of the project. So our MPV is 66.4. IRR is easy to do. Project cash flows are conventional, so I don't have to worry about multiple solutions. Select all of them. Boom, boom. Obviously, on the face of it, uh, we accept this project. MPV is positive. IRR is greater than cost of capital. But just to be fancy, I'm going to put a little bit arrows on this. Why? Because I can be fancy. New rule, use a formula to determine which cells to format. No, that's not what I'm going to do, actually. I'm going to do icon sets. Let's see. Well, now I'll be fancy. I'll put 5 arrows. Now let's put 4. All right, these are going to be based on formulas. If it's greater than